What is up, guys? Dirk here. Bitcoin is back over $24,000. A lot has happened in the last 48 hours since I made the previous video on Sunday about the whole USDC depeg, the banking crisis, and everything that's going on there. So in this video, I'm going to dive into the charts, share with you what happened, why it was predictable before the time, and what I think of the charts now going ahead into the next couple days and the next week or two. So let's dive straight into it. By the way, if you are new to the channel, subscribe down below, smash the like button if you enjoy these updates, leave a comment if you have any questions, and let's get into it. Alright, so I want to start out by saying again here, this video that I made just over 2 weeks ago, it's on the channel. I will link to it up here. It's in the description down below. And I literally said here, my next Bitcoin trade, here is the setup. And this worked out so incredibly well. It still actually kind of amazes me how it was possible to actually predict this ahead of time. So the reason why I'm sharing this with you again and why I'm going over this is to show you that the markets are predictable to a degree. The technical analysis, the charts show the way. The news always comes out after the fact. So if you forget about what people are saying, if you forget about the headlines, what is going on, because all of that stuff is the distraction. If you purely focus on the charts and you learn how to read these charts and you create a system for yourself that allows you to determine trend changes and what the objectives are of price movements, which is almost always liquidating the opposite side. Okay, it's a zero-sum game. There's always participants. Some of them are longing and buying, others are selling and shorting, and it's always this game of how can we liquidate the most amount of people. So look at the charts as a sort of like a video game that's always trying to trap people, bait them in to taking a position and then reversing that position to be able to liquidate those people. So the charts move in such a way, they'll continue pushing higher until eventually FOMO kicks in and the people who are on the sidelines, they start buying in. Okay, and when that happens at the point of maximum FOMO, you usually tend to see a reversal where it drops and it liquidates those people who bought at the top. It drops, depending if we're looking at leverage or spot, but it drops enough to get those people to either be liquidated or to get them to sell at a loss, and the same in the opposite direction. So this setup is based on the fact that this is a range over here, and we have the lows, we have the highs. Okay, first we went to the highs. There's people here who are longing at the top, and then the objective would be everyone who's longing all the way here. Well, they're going to get liquidated. How does that happen? With a drop below the lows, because retail investors, when they trade with leverage, and there's obviously a lot of people that are trading with leverage, there's tons of YouTube channels and social media influencers that are all telling people to trade with leverage, and that's great. Leverage is a great tool, but you have to know what you're doing. And the average person who doesn't spend a lot of time studying and understanding how charts work and how price action works and how liquidity works, they tend to end up longing tops, and they place their stops under previous lows because they think that's safe. And that works long enough, as long as the trend is bullish. Eventually it reverses. It takes out all the previous lows all the way here, takes out all those stops. Then obviously it does the same. People start shorting as it starts dropping, think it's going to continue dropping, and then it reverses and those people get liquidated. Okay, so that is the logic behind this and why I'm able to make this prediction. And again, this is not about me and being right or wrong. I'm wrong plenty of times too. I just want to try and explain to you how these markets work and how I see them and how I'm able to make these predictions ahead of time so that you can use that for your own trades, for your own entries, and hopefully be able to make more profits, whether you're trading with leverage or whether you're trading spot positions. Because as you can see, these predictions, these patterns, these algorithms, however you want to call it, they work whether it's a 4-hour chart or a daily chart or a 5-minute chart or a 1-minute chart, just over and over. It's fractals within fractals. The same price action works. Okay, so with that out the way, I was saying here, 23,000. I was looking for a sweep of these lows to the CME gap or just below it, below 20K, then back into the range, take a long position on a reclaim here, targeting the top of the range because these highs have not yet been swept, meaning in the same way as these got swept over here, there's people here who have taken short positions who have stops just here. So if this is correct, we continue going higher and we go above these highs because we take out the liquidity, the people who are shorting with stops over there eventually. Okay, maybe not in one go, but eventually. So here we are with the exact same drawing, the exact same chart, the exact same setup. This is what I drew on that prediction. That was the setup, right? And you can see how almost scarily accurately it followed the squiggle. Sure, it went up first instead of down first, but overall the objective was exactly the same. It ended up going down, it ended up sweeping the lows as I wanted it to do, and then it reclaimed the range, and it never ended up wicking below here. So this would be a point where you take the long position on a reclaim of the range with a stop at the low here, and then targeting the top of the range. That was indeed the goal. So far we have not yet achieved that, but we came pretty close. Now the cool thing about this is that if you just see this as a chart, whether it was Bitcoin or just a random chart you didn't even know what it was, purely based on the price action, this was completely predictable. What wasn't predictable, what nobody knew, was the fact that USDC and Circle was going to depeg, that Silvergate and Silicon Valley Bank were going to go into a collapse, or I don't know if they're insolvent, they go into receivership, First Republic Bank, you know, all this stuff happening. That is eventually what people will say, oh, that's why the market dropped. But no, because you can see here, I predicted this more than 2 weeks in advance without knowing any of that stuff that was going to happen, purely based on the chart. So this is why I'm sharing this with you, so you can see. Stop watching the news. Stop listening to people who are telling you, oh, you have to watch the news, the headlines, and the reason why the market dropped is because XYZ, or the reason why the market pumped is because XYZ. No, this is all about price action, and the news comes after the fact to just match the narrative, okay? But more often than not, it is always predictable, and if you know how to read the charts, it can be very helpful because you can see what the objectives are. In this case, the objectives was taking out this low, and in my opinion, the objective is still going to be to take up the highs, which we have not yet done. But we had this major move, snap back up. Obviously, the news was that, you know, it wasn't insolvent. The government's going to step in and backstop and make sure the depositors are made whole, that they have all their money. CZ stepped in, and he's going to convert almost $1 billion of their insurance fund into crypto, etc., etc. So we got this massive snapback, purely technical, massive move to the upside, and you can see this would have been a very nice trade, 1 to 5, maybe even 1 to 6, if you caught it properly. And that's just how these markets work. Okay, so I want to share with you now a little bit my thoughts on what I think going forward, because that can be helpful too. Now we're going to switch it up to the 3-day chart that I always tend to share. I've been sharing it for months and months and months. 3-day 50 moving average. Look at this. Okay, and again, this is why it is predictable and why the news always tends to come out afterwards. Again, it's not always right. I make mistakes too, and it's how about you interpret the chart. If you interpret it incorrectly, of course, you can be wrong with that kind of stuff too. But I made a video. For the longest time, I've been saying a reclaim of the 3-day 50 moving average here in blue will give us a bullish higher time frame signal, because we did not get that all the way since we dropped below it at the end of 2021. 2 consecutive closes above it. We did not get that here. It was a fake out. We did not get that here. It was a fake out. Got 2 consecutive closes above it. That was a bullish confirmation signal, because if you go back in history, you can add this to the chart yourself in TradingView. You can see that when we reclaim it, more often than not, it is a major multi-week or multi-month trend change. What you can also see if you go back in history is that when we reclaim it, we do tend to retest it at least once before continuing the trend. So you can see that happened over here in 2020. We reclaimed it, stayed above it, retested it, and then we launched. Okay, same thing here. After the May 21 crash, got above it, retested it, and then launched higher. Same thing now. We broke above it. I've been saying a retest of the 3-day 50 moving average is what is possible, and as long as the price stays above the 3-day 50 moving average, we are in a bullish trend on the higher time frame, because that's just what the data suggests. That's how these markets work, and for me, I'm staying bullish as long as we are above this 3-day 50 moving average. A new candle close below it would be a bearish signal and potentially an invalidation of the bullish trend. So what we got is exactly a drop, exactly to there, right? If that's based on news, how is that possible? It's not, because I made that prediction more than 2 weeks ago, and that was the target. It was the technical target, and the news just comes out, the narrative comes out, whatever you want to call it. It dropped there and it bounced. So now what we are looking for, in theory, could be a much larger move to the upside over the coming weeks and months, potentially a lot higher. And then the first target would be the liquidity objective. Okay, so I think we get above this 25K. The next target would be this level. Okay, it would be these highs over here, because again, it's all about the liquidity. There's people who are shorting this, there's stops here. So that would be about 32,000. You can see over here. Maybe initially we see some resistance at 28, pull back a bit, but I think that target would be the 32K. If we can get above 32K, then I think that next target could be as high as 48,000. The reason for that simply is also it's the Fibonacci retracement from this whole move. As you can see over here, coincides with this high. So just want to hide this so it's more clear. As long as we stay above this, you can see retest, launch. So 32,000 to 48,000, in my opinion, is in play in the next several months. And we have to see, is this going to be a repeat of 2019, 4 years later, where we had the move up until about June, and then a pullback sideways all the way into the halving, and then we launched the bull market? Or is this time going to be different due to whatever is happening in the world, the fundamentals, the governments and central banks stepping in, saying they're going to backstop everything, and maybe we just get a massive melt up in the global stock markets and in cryptocurrency? The halving is set to happen in April of 2024, which is about just over a year from now. So what if we just get this major melt up where we don't spend another month going, or another year going sideways, and we don't pull all the way down, and we just continue grinding higher up to the halving, then we accelerate, we have this massive pump into middle of 2024, something like that, and then the Fed is cutting interest rates and we get a global crash in everything, in stock markets, crypto, etc., etc. Because I think the most unexpected scenario now, everyone is expecting, oh, we get a bull market after the halving, which is, middle 2024, and it lasts into 2025. That is what people are expecting. And of course, it's a possibility, but we've had that 4-year cycle play out so many times. So exactly, it makes me think it is too expected. And what is unexpected now is a massive bull market that starts from here and just only continues up until the halving, maybe a little bit after the halving, and then maybe tops out somewhere middle of next year. We just get a massive 12 to 18 month bull market that has started in the beginning of the year. But of course, making a prediction like that ahead of time is pretty difficult. We take it day by day, week by week. As long as it's above the 3-day 50 moving average, the trend is bullish, and we could be seeing a major bull market. Now, what we're looking for too is if we change it to the weekly chart, this is the next important level. Okay, and that is the 50-week moving average, but also the 200-week moving average. And as you can see, we got rejected over there. That was the red, but you see we got this very nice reversal candle, wick down on the weekly, and now we're going up here. So this is very bullish in my opinion. And what we need to see is we need to get a weekly close back above this 200-week moving average. So above 25.5, we get a weekly close there, and I think we are back in full-blown bull market territory, which basically means we are above both 200 and the 50, because you can see the 2017 bull market was when price was above both those averages. The same thing, 2020 bull market was when we were above both those averages. So you can see over here, we get back above there. Then basically these indicators and the data based on previous history shows that we would be in full-blown bull market territory. It doesn't mean 100% that we get a bull market, but the conditions are all there. All the higher time frame conditions, 3-day 50 moving average, the weekly 50 and 200 moving average. And at that point, we have open skies until, target first 32,000, then 48,000. And that would be 48,000 is the Fibonacci golden pocket, right, that I just showed you. The same thing as happened here in 2019. If we get past there, then we're looking at all-time highs. But I would start to get cautious. If we can get to 48K, we have to start considering the fact that maybe it reverses there. But again, like I said, let's take it 3 days at a time. Let's take it a week at a time. For now, this move, this drop back into the 3-day 50 moving average and the rebound to almost $25,000 is, in my opinion, very, very bullish. So things are looking good. Smash the like button, follow this channel if you are not doing so already. And if you want to join my VIP membership, you can see these bull markets, they happen fast. So the longer you wait, the less your profit potential is going to be. If you want to learn how to navigate these markets, if you want to join our community of more than 2,000 traders and investors around the world, you want to get access to our Discord chat group where I'm sharing charts and ideas every single day. The link is in the description down below. You can sign up. It's risk-free for 60 days. And come and try it out. Get access to all my courses, updates, training, Discord, and let me help you navigate these markets better. Thanks for watching. Share it with friends and family. I'd appreciate it if we can get some more views on this, and I will see you in the next video.